My name is Kenneth Beer here with Stock Indices. What's going on, everybody? My name is Kenneth Beer and I run Stock Indices. And in this video, my goal is to break down the overall market using economic indicators and technical analysis to come up with my overall assumption for the overall market direction. So let's hop straight into this video. So today is Thursday, May 27th, and I'm going to break down these economic indicators for you all. There's quite a bit going on here because I'm using a new website because for some reason my original one, which is I like using this one because it is much more simplistic, but for whatever reason the data hasn't, they haven't updated it. It's being slow, so I can't look at those, so I'll be viewing this, but there's only a couple numbers that I want to look at actually that are going to really make sense for my assumption. So the first number is the durable goods orders. Previously that was 1.3%, coming in at negative 1.3%, so dropping a whole percent lower than what it previously was for those numbers. And we have the GDP price index coming previously at 1.9%, now coming in at 4.3% for those numbers. Then for the GDP growth rate, we have previously 4.3% coming in at 6.4%. Next we have the initial jobless claims, which is for May, coming in at previously 444,000. Now the actual is 406,000. And then we have the jobless claims 4-week average coming in at 504.75 thousand. The actual is 458.75 thousand for those. So both lowering our numbers for those numbers. Next we have is continuous jobless claims for May. Those were previously at 3,738,000. So that is seems like that's a number in the millions. I'm not sure. I don't see a decimal point, so I'm guessing that's a number that's in the millions. But then now actual coming in at 3,642,000. So at the K at the end of it, like it's a 1,000 on top of what it already is, which is indicating me, if we do the math on that, we can see, yeah, if we do, that's going to be a number in a million there for the continuous jobless claims. So around 3 million for those, 3 million, whatever number for that, 3,642,000, I believe, for continuous jobless claims. So we're missing on those as well. So each one of these jobless claims numbers are dropping, which is a good indication for a more stellar economy. Then we have pending home sales, previously at 1.7%, now at negative 4.4%. Then we have pending home sales year after year, 23.3% previously, coming in at 51.7%. So that's everything I'm looking at for today. So a lot of good numbers coming in, but as far as orders and imports coming into the U.S., those numbers are looking to be a little less than what they previously were for whatever reason. So it just showing me that the economy is not really doing a lot of purchasing as it does usually, with these core prices and stuff like that going into the negatives, such as the corporate profits. Corporate profits were negative 3.3%, coming in at 0.8%. These numbers is just kind of showing us that U.S. corporations are making more money than previously. So that could be a good thing. And then for the durable good orders dropping a lot, I don't know about that one, but I know this number right here could be well for big corporations in the U.S. So that's all for economic indicators here. We're going to hop into these charts here, put this all together. Now, like I said yesterday, the S&P 500 had a overhead resistance, which is now support. Like I said, it's kind of like a little wedge here, and was with some decent strength. And so you can see as it broke out, like I said yesterday, it was gonna come back down and base at this previous resistance level, which is now going to be support. And that's kind of what it's doing right now. It is coming down, basing at this level here, and making its way back up towards the high. So we would have to make sure and see, okay, well, we got highs here on a micro level, which I'm pretty sure, you know, if you're looking at on a daily chart, that it will get past, you know, this pretty easily, unless this is just such strong of a level, which I don't think is that significant. I believe that it just ran right through this level and continued to the highs, but still watching out for that. Some strength off the open though for the S&P 500, so that's looking nice. Looking at the RTY here, still consolidating, but looking pretty strong today. Most sectors and stocks are looking strong today, and we're not even in conjunction with our moving averages. We're above now the 10 and the 50, so showing us that we're having some relative strength off the lows here. Still got some overhead resistance up high for the RTY, so still want to, you know, keep that in mind when entering in positions on the Russell 2000, and just know that they could potentially get rejected off some of these highs here, some of these resistance points that are above our current level. But you can see the strength right now, and I said yesterday, like, once it gets above those moving averages, when the strength will start to come in. But we just got some more levels up top, which the market has to overcome before continue to make its highs and get back to these all-time highs there. Looking at Bitcoin here, Bitcoin is still making a rise, very close to that 10-day moving average. Once it reclaims that, got some overhead resistance here. I said at 4,500, 45,000. Once it gets to 45,000, we could potentially see some resistance, and it maybe consolidate at that level for some time before it continues to go higher and reclaim the 50. But as of right now, Bitcoin is holding up for the fourth consecutive day, so still looking strong for Bitcoin. Lows here. Crude oil. So crude oil yesterday, I said that it is in the consolidation phase and was at some overhead resistance, and that the resistance was pulling back towards the 10. Well, today, looking like it may be able to break out if the market is strong enough. Everything seems to be wanting to go towards the upside. So with that being said, there is potential for crude oil to make new highs, and then we got another level at 68. But for light crude oil, we could be seeing good gains above those miniature resistance levels up below, right below the highs at 68. In my trend line says 67.95, but it's really 68. So once, you know, because we look for those whole number levels, you know, whole number levels is what's going to really stand out when it comes to psychological resistance and support zones. So looking for it to get potentially past that level above the 10 and the 50, so relative strength on this one. But it could potentially be, you know, a fake out and then come back down and still consolidate. So not going to rush anything for crude oil, but crude oil is showing us some relative strength. Gold. Yesterday I said gold would get into this 68, I believe. What level? Yeah, 61.8 level. That's what I said gold was going to get to, but gold didn't get there. Stopped right here, right below the 61.8 level. We're coming back down as of right now. We could base right at this fib level here at 50%. If we base there, That's where the 10 is, and if it holds up above the 10, I think that's pretty good. I think I could work and that some support. I think that's a psychological zone in my opinion. So if it does hold up right above that 10 at the 50% level, that would just confirm, that theory, and we could see it continue to go higher for gold. But gold very strong off the lows, very heavily invested in asset, very high in demand, and that's why we're seeing these climbing prices for gold. ZB bonds dropping off, was looking strong a couple days ago, but dropping off right into some support below the 10 and 50-day moving average, so showing some moderate to very short-term bearishness, overall bearishness as of right now, seeing a little bit of a dip off. So borrowing power for bonds dropping below its previous levels, and we just want to see where this can go from there. Is borrowing power and the bonds still going to sell off, or will they hold up? Don't know. I'm not a real big bond person. I do look at it to kind of see what is borrowing ultimately shows me whether or not stocks are going to continue to be strong. If bonds are rising very rapidly, it could mean that inflation is starting to rise, and it could mean that regular investment, regular securities are not being so favored. But as bonds start to drop, it could mean that stocks are regaining that momentum. So that's kind of what I look at it for, just to kind of give me a overall gauge and market direction. Bonds are rising, stocks usually fall. So when bond prices are staying stagnant or declining, that's kind of what we want. We don't want bond prices going through the roof. Mini Dow Jones futures here breaking out right above that mini resistance level. It's a funny name, but that's what it is. It's right below the highs. So we're right below this level here. Could see it get above. If it gets above this level, we may base back out and continue to go higher, or we could just go to the highs at 35,000. But for the Dow Jones, looking strong. This is a very strong day for most stocks and securities. And you can see like the correlation with everything being strong. And then we got bonds selling off. So that's how I use that in conjunction, just to kind of give me that confirmation. Qs on the other hand here is, I think that since it's a gap right here, and since it's above, once that pressure gets released and some volatility and some volume starts to kick back in, I believe that we could see a rise in prices for the NASDAQ, or also known as the Qs. So I already know VIX. Yeah, so that's all the indexes I will be going over today. Now looking at some of the sector rotation here today, we got XLI leading across the board. XLI gapping up, looking real strong for the industrial sector. So that's where the money is being rotated in. Looking at those, if you're an investor, looking at those industrial stocks and industrial picks for today, those are our leading names. Utilities, XLU, though, on the other hand, is the only one that is lagging behind alongside the rest of the market. So XLU, utilities has overall been weak. So XLU just waiting for it to regain some of that strength, but as of right now is looking quite weak. So that is for XLU. XLI Industrials is the leading. XLI is the leading sector, and XLU is the only sector today. Most all sectors are green, but I'm just giving you guys what is the leading sector, and XLU is the lagging sector. So we can see where the money is going in and where the money is flowing at in the market today. That is just the overall market breakdown for you guys. If you enjoyed this video, leave a comment, like, subscribe. If you have a question, leave a comment down below about any options videos that you would like to see, or any type of trading videos, any questions that you may have that you don't understand, or if you really just don't know what I'm talking about, leave a question. I will answer it in a video for you all. That's what I do. That's why I'm here. So if you enjoy, I will see you all in the next one.